Good afternoon. This is Brian Shannon from Alpha Trends Blogspot. It's Thursday, November 2nd, 2006, and I've got the S&P 500 on the screen right now. The market did close with a slight loss today. The spiders here were down just a nickel. And yesterday I had pointed out what a lot of people consider to be a bearish reversal day, which is the engulfing pattern that I had pointed out, that big red candle that completely engulfs the prior day's range. Now, Brett Steenbarger over on his blog wanted to quantify that and say, hey, yesterday I said that I didn't really trust that. I prefer to focus on the trends instead. And he went back and tested it and found that since I'm sorry, not 1994, but 2004, in the S&P 500, there have been 12 instances where we've seen bearish reversal candles, or bearish engulfing, as they're also called. We've seen 12 instances where the market has formed one of these, and 11 times of those 12 times, the market actually closed higher the very next day, and the average gain was actually 0.32%. Even more interesting is that out of those 5-day gains 5 days later, since 1996, there's been 45 of them, and the average 5-day gain was 0.75%. Of the ones since 2004, the market's been higher by 0.9% 5 days later, so nearly 1% higher. And that got me thinking, why? Well, here I think a lot of it has to do with emotion. I think that these big bearish days bring in a lot of emotion. Looking at my email box last night, kind of confirmed that. I had a lot of email, not a lot, but I had 2 or 3, 4 maybe emails saying, Brian, what do you think about this market? Should I go short everything? Absolutely not. The market is in an uptrend. The uptrend has not been damaged, and that's what you have to look at here. It's just one day's activity. One day does not make a top or a bottom usually. You can always go back and point and say, hey, that was the top if, 6 months later we're lower. But the bottoms and tops are a process, not an event. And clearly this market continues to be in a strong uptrend. We're going to continue to focus on support down near 136. So I don't think any damage really continues. The theme continues to be that no damage has been done to the uptrend. Looking at the 10-minute time frame, again, we were looking at this head and shoulders pattern yesterday, and I thought that measured out to a target of about 136. We didn't get down there yet. It's possible that we will. It's possible that we won't. But the market is giving us reason still for, kind of going slow in here. It's been kind of churning back and forth. Yesterday we got that breakdown. Now we've got this declining 5-day moving average, and I want to see that start to flatten out again before I have much confidence in buying. And we're starting to see maybe a little bit of accumulation in here. I thought today's action was kind of disappointing, though. If they're going to bounce, they should have bounced. I think breaking back below 136.5 tomorrow could lead to that test of 136. But all in all, it was a slow, boring, neutral day. Look at the daily range and look at the VWAP. It spent a lot of time around that VWAP with no one really able to take control, the buyers or sellers. So I don't think we can read much into today's trading in the S&P. And in the semiconductors, the group that continues to give us the most reason for concern, we're looking really ugly in here. It broke the range of the last few days, what we've been looking at here. Let's take a look at this 10-minute chart, and we've been looking at this 3330 level. I thought we were going to get a little bit more significant bounce than we did before we saw some weakness, but there's no bounce in here. I don't see what's going to be the catalyst to turn these semiconductors around. I don't know if there's earnings due out for some of them that might turn it around, but the chart certainly doesn't reflect that. I think that the chart typically leads the market anyway. So now we've got to look at this market and say, this level here, this 3330, is going to be very important. If the market can close back above there tomorrow, which I kind of have a sneaky suspicion they might try and get them back up there on a closing basis, then we're kind of back to neutral. But if it stays below here, especially before the weekend, then it could really get more people thinking about these things and wanting to adjust their risk. But it's looking pretty ugly. I think we still want to focus on the 3260 level as the more important area, where that's where I think you can say the sellers are clearly in control, and then we're going to probably break down further towards 31 and a half or so. The Nasdaq 100, the QQQQ, this again also continues to be in an uptrend. It's hanging right onto that trend line. It did close below the 20-day moving average. No big deal. That the direction of that moving average is still higher. When we look at the 10-minute time frame in here, we'd also pointed out that head and shoulders pattern that measured down to I think about 4130 is where it measures down to. But we're going to be more focused on support near 4160. Quiet day in here. It looked like to me early on that this rally was going to fail. I had gotten short over, where was it? Let me look at the 1-minute chart. I had gotten short pretty aggressively in here at 94 cents and was thinking, hey, great, it's going to break down hard. I covered part of it in at 90 and 89 cents, 93, and then right there. And then it ended up doing a whole bunch of nothing. Look at how it did hold above its daily VWAP today. So we're finding a little bit of stability, at least on a one-day time frame, which really, doesn't mean much of anything. But neutral at best in here. I can continue to be confused right in here, and that's the message of the market is telling us, that hey, it's just chopping around here today. There was no direction, and it was a good day to take it slow. The mid caps are finding support maybe at the highs from late June. More importantly, though, is going to be the 140, the 139 and a half to 140 level. If it breaks below there, there could be big trouble. Same thing in here. We had a gap lower, but then it recovered and just kind of went neutral today. So all in all, today wasn't really, there was nothing really to be excited about in there, I didn't think, unless you owned MVIS. This stock I had mentioned yesterday that I'd suggested buying above here. I told you I bought it and also got out of the stock with about a penny profit. And I saw it moving again today. So what I had done early on was I'd seen that the stock gap higher. It pulled back below the VWAP and below this daily R2. R2 usually acts as resistance, but a lot of times when the stocks are strong early on and they test that and then come back above, then they get strong. So I bought the stock right in here, or actually I bought it in here as it was rallying back up off there at 224, and sold some into this strength, and it was a nice low volume consolidation. I didn't want to have another ADSX on my hands where I saw it just run away without me. So I held on, I think, right up till my last sale was right about there. But anyways, great play in MVIS. And I know based on the emails that some of you did get involved and some of you did take your profits, at that $2.45 level, which was kind of what we were targeting in. Hopefully you're not holding it any longer because the company's due to report earnings out after the close today. I had found out from somebody who had emailed. Alexion Pharmaceuticals, ALXN, what we were looking for in here was first a pullback to 38.40. We got that early on. And then to buy it above 38.60, we got that. So I had suggested that you buy it above 38.60 and put your stop down at 38.28. So that hurt. It was about a 1% loss of 32 cents in ALXN, just under 1%. And to me, that's a bit, that's a big loss. UHCO, I had suggested buying this one above 14.65. You had that opportunity in here. Our stop was then going to be at 43 cents. Clearly, that 43 cent stop didn't get hit. I think right now you could raise your stop to break even in UHCO. I continue to like the way this one acts and think it can head up towards about that $20 level. Looks like the buyers are back in control. PCCC, this is PC Connection. The suggestion here was to buy this stock after a pullback. Let's take a look in here. A pullback to 11.35, and we got that. Then to buy the stock above 11.40, above 1145. So that occurred as well. Our stop was going to go at 1110, so your position should still be open. I would use this little pullback low as a stop and say $11.48 on the stop for PCCC. CONR was a short sale that we wanted to get involved in. We want to see the stock rally to 2460 and then drop to 2440. Sell it short there and set our stop at, I'm sorry, we're just looking to sell it short below 2440 with a stop at 2460. Should have got short here, loss of 20 cents right here at this point. And that's what, what a good stop does. It saves you from the bigger loss. Not all the stocks are going to be winners, but when you have losers, you want to keep them nice and small. VMSI, we're looking for a rally to 39.83. Obviously, that never occurred, so there should have been no trade taken in that stock. And finally, InfoSpace, we're looking for a rally up to 1995. We got that rally, and then to sell short the stock below 1985. That occurred as well. Our stop was going to go up at 2025. Obviously, that never occurred. I think you want to lower your stop to break even in INSP right now.